It may look, feel, and cost like a recession. But is it really a recession? Despite rising inflation and ebbing financial confidence, current economic conditions don't yet meet the technical standard of a recession. But that hasn't stopped many economists and business leaders from calling it one. Take Cathie Wood, the prominent U.S. investor and founder of ARK Invest, who has joined the chorus of financial experts weighing in. ARK Invest CEO Cathie Wood has never shied away from bold predictions. In February 2018, she put a $4,000 per share price target on Tesla stock. That was before the split, but that price target implied a market cap of $720 billion. That prediction turned heads on Wall Street because Tesla was worth just $60 billion at the time. Not many analysts swing for the fences like that. In hindsight, it appears Wood made the right call. Tesla is currently valued at $810 billion, and its market cap actually surpassed $1.2 trillion last year. "We think we are in a recession," Wood said in a recent CNBC interview. "We think a big problem out there is inventories, the increase of which I've never seen this large in my career. I've been around for 4 to 5 years." Whether Wood is right or not, American households should watch for more telltale signs of trouble and make a few savvy moves to ensure their finances stay solid. Before we listen to Cathie Wood, we want to use this opportunity to thank all our viewers and subscribers for your support. Thanks for watching our videos. We appreciate you a lot.
Well, what we do see in these earnings results is that we are in a recession. And we've been calling for a recession for quite some time, a lot of it based on excess inventory. So we think this is an inventory-led recession. And I think that's coming through loud and clear. We're seeing advertisers cut back dramatically. It seems like when Walmart and Target announced in May that they were loaded up with inventories, and this was far above what they had expected, and that they were going to have to do something about it, you know, a lot of advertisers started cutting back, cutting budgets, saying, okay, this is a possible recession indicator. And as you know, we've just gotten 2 quarters, consecutive quarters of negative real GDP growth, but a lot of people still are fighting the notion that we're in a recession.
Yeah, certain people are fighting that notion. A lot of economists like yourself, there is a technical recession. But then there's also what a lot of folks, including Fed Chair Jay Powell, says isn't necessarily a recession. They define it as a broad-based slowdown across a number of industries. Are you seeing that?
Yeah, I think this is a recession. And I think what the Fed is really focused on is employment as a gauge. Employment is a lagging indicator. The CPI, the PPI, all of those are lagging indicators. If you look at initial unemployment insurance claims, they're up 50% from the low. So I do believe we're going to see some significant disappointment in the employment numbers moving ahead. And I also think, based on what we're seeing from gold, the gold price actually peaked in August of 2020. Many people don't know that. And it's down near the low end of a range, a 2-year range. That's an important inflation gauge. And then copper price. The copper price broke down. It broke a 1-year trading range in the $4 to $5 per pound range. And it has come down hard. So I think all of these are signals that that inflation is going to come down. It's going to come down significantly, and that we're probably going to see some deflation. And we've been calling for that for quite some time as well. Right. I know you have. And how do you position your portfolio in a recession? What has changed about the way that you're looking at growth stocks? Typically, growth stocks will outperform as we move towards the end of a bear market and an end of a recession, because they're the new leadership. As inflation and interest rates were going up, we were facing incredible headwinds. That started in February of 21. And it looks like, at least so far, that we bottomed on an intraday basis based on our flagship strategy on May 12th. And we actually bottomed before the NASDAQ and the S&P did. The S&P broke down to new lows after that. So that was an early signal that we might be turning the corner here. But I think to really turn the corner, the Fed does need to change its spots. It's getting all kinds of signals that it should, like an inverted yield curve. And yet I think it's paying attention to lagging indicators of inflation, determined not to be blamed for letting the genie out of the bottle and causing another 70s-like inflation period.
As the economy continues to slide, should you really be investing right now? Are you looking for a secure cryptocurrency trading platform where you can buy, trade, and hold over 600 cryptocurrencies at the lowest transaction fees? Binance is a world-class crypto exchange with a set of amazing features for all categories of crypto lovers. No matter your crypto needs, Binance has got something for you. Binance staking is an excellent way for crypto hodlers to increase their crypto holdings while avoiding many risks associated with staking on other platforms. Binance will protect you from slashing risks, meaning you get exactly the same number of tokens you staked after the agreed duration. Though fiat value returns can vary with market conditions, Binance locked or DeFi staking is a great way to earn amazing rewards on your cryptocurrency holdings. Plus, there are no complex technical requirements for staking on Binance. With the click of a few buttons, you can get started immediately without any technical know-how. Just register on Binance, click on Binance Earn, then Staking, and select any of the mouthwatering offerings under Locked or DeFi Staking. It's super easy, convenient, and rewarding. Don't forget that Binance is still offering a mouthwatering $500 reward for all users that register with our link. Please click on the link in the description box below to get started. New economic data shows that GDP has declined for 2 straight quarters, meaning the U.S. economy has contracted during the first half of 2022. This is commonly referred to as a technical recession, though we're not officially in a recession right now. The National Bureau of Economic Research, which includes the economists in charge of declaring whether the country is in a recession, has not made the official call yet, though it could be coming. All of this uncertainty can be alarming for investors, and it can be difficult to decide what to do with your money. Is it really safe to invest right now, or should you hold off? Why it pays to keep investing? It can seem counterintuitive to continue investing when the stock market is down and the economy is inching closer to a recession. After all, if a steeper decline is coming, investing now could feel like a risky move. However, downturns are actually among the best times to invest because crypto and stock prices are significantly lower. By continuing to invest, you can snag Bitcoin, other crypto tokens, and quality stocks at a fraction of the price. Right now, some crypto tokens are down more than 50%, while stocks have seen their prices fall by 20%, 30%, 40%, or more, giving you the chance to buy it at a hefty discount. The caveat, though, is that it could take time for your investments to rebound. Nobody knows how long this economic downturn will last, so if you choose to buy, be sure you're willing to hold your investments for at least a few years. While that's a long time to wait, the payoff could be enormous. By investing when prices are at their lowest, you can see substantial returns when the market inevitably rebounds. Recessions can be daunting, but they are normal. When you put a strategy in place, you can ensure you're as prepared as possible regardless of what happens with the economy. Our best strategy remains dollar cost averaging. Dollar cost averaging is the practice of investing a fixed dollar amount on a regular basis, regardless of the price. It's a good way to develop a disciplined investing habit, be more efficient in how you would invest, and potentially lower your stress level, as well as your costs. Let's say you invest $100 every month. When the market is up, your $100 will buy fewer shares. But when the market is down, your money will buy more. Over time, this strategy could lower your average cost per share compared to what you would have paid if you bought all your shares at once when they were more expensive than the average. Here at Savvy Finance, we are presently buying Bitcoin using dollar cost averaging, which will yield us significant benefits in the long run. What do you make of Cathie Wood's assertion that we are already in a recession? Let us know your thoughts in the comments. Thanks for watching.